G'day guys, I just wanted to check in and provide a news roundup for Friday the 29th of November. So there were a lot of stories today that illustrate the increasing embedding of virtual currency within mainstream financial processes and the disruption to the global economic orthodoxy that distributed ledger technology is driving, particularly at the level of nation states. In the last 24 hours, we've seen officials representing both the United States Federal Reserve and the European Central Bank issue statements supporting the exploration of central bank digital currencies in response to the creative destruction that the cryptocurrency phenomena has wrought upon the global payments sector. Said creative destruction has recently been accelerated both by Facebook's plans to launch its Libra stablecoin and expectations that China may soon move to launch its planned central bank-issued virtual currency, for which the country holds more than 84 patents relating to its launch. In Europe, the outgoing executive board member of the European Central Bank gave a speech outlining challenges faced by the bank as a result of the transformation of the global payments markets. The outgoing chairman stated that, quote, "We will explore how and to which extent central banks would need to adapt their policies and instruments to face challenges to consumer protection and monetary policy transmission," end quote, adding that, quote, "A central bank digital currency could ensure that citizens remain able to use central bank money even if cash is eventually no longer used," end quote, and that, quote, "A digital currency of this sort could take a variety of forms, the benefits and costs of which the ECB and other central banks are currently investigating," end quote. In the US, the chairman of the Federal Reserve, Jay Powell, revealed that while the Fed is not currently developing a central bank digital currency, the institution continues to, quote, "carefully analyze the costs and benefits of pursuing such an initiative in the US," end quote, with Powell adding that said efforts, quote, "position the Federal Reserve to be able to react more expeditiously to rapid developments in this arena," end quote. In my opinion, these statements acknowledge that both the ECB and the Federal Reserve understand it to be imperative that they are able to effectively react to major developments within the central bank digital currency space, in addition to acknowledging the disruptive effects of distributed ledger technologies upon transnational economic relations, with the outgoing ECB chairman explicitly citing stablecoins as posing significant challenges to the existing European legal financial architecture. I think that it's important to consider that while both the ECB and the Federal Reserve are institutions that are currently hostile to cryptocurrencies, I believe that the adoption and normalization of basic financial processes being conducted using distributed ledger technologies will inevitably drive greater adoption of Bitcoin and other cryptocurrencies, as said crypto assets can offer significant advantages with regards to privacy, decentralization, and other utilities over central bank digital currencies. Looking at some different European news, we can see that the Swiss Parliament will be voting on a proposed legislative framework intended to bolster innovation within their blockchain industry. According to Switzerland's Federal Finance Department, the legislation is aimed at, quote, "increasing legal certainty, removing barriers for applications based on distributed ledger technology, and reducing the risk of abuse," end quote. The Finance Department adds that Switzerland is seeking to, quote, "establish itself and evolve as a leading, innovative and sustainable location for fintech and DLT companies," end quote. In Germany, proposed legislative changes may see the country's banks authorised to facilitate the sale and custody of digital assets, including Bitcoin. According to local news outlet, and you'll have to forgive my Australian accent on this pronunciation, Handelsblatt, should the law pass, then, quote, "starting in 2020, financial institutions will be able to offer their customers online banking virtually at the touch of a button, along with classic securities such as stocks and bonds, as well as cryptocurrencies," end quote. So just by looking at this handful of stories that I've chosen from today's news cycle, we can see that the interaction between regional entities or nation states and cryptocurrencies is rapidly evolving, with virtual currencies becoming increasingly embedded into mainstream financial processes and institutions. One arena in which we can see the discourse between cryptocurrencies and the legacy financial order is security tokens, where the efficiency savings and opportunities for global liquidity afforded by distributed ledger technologies are being coupled with existing financial products. Today it was reported that the top 15 ranked global wealth manager, HSBC, plans to shift $20 billion worth of assets to a blockchain-based custody platform dubbed Digital Vault by the second quarter of 2020. Digital Vault is slated to provide public access to real-time records of securities traded on the private markets. And in another sign of increasing mainstream adoption, the daily trade volume for Bakkt's BTC futures contracts hit an all-time high of 37 million, bringing the total trade volume for the contracts to over $250 million since their launch 2 months ago, suggesting that despite the market's weak liquidity at launch, the contracts are gaining in popularity. Alright guys, I'm going to leave it there for today. It looks like Bitcoin's breaking up above the 7,700 level. If it can push up above the resistance area at 7,750 that it's currently battling, I think we'll get a test of the 8,000 area. As always, smash the like and subscribe buttons, hit the bell, please leave a comment below. I'd love to hear your thoughts on the increasing integration of DLT into mainstream financial processes at the state level, and whether you think that such bodes well for the broader adoption of Bitcoin and other cryptocurrencies. Trade safe.